summer has been crazy in a lot of housing markets across the U.S. But will it ease up in the fall? Today we're going to look at the indicators and see what they say. This summer has been one of the hottest housing markets on record, with many communities reporting unprecedented sales. But will it relax as we go into fall? Let's look at the 14 indicators to find out. But first, please take a moment to like and subscribe. Doesn't cost you anything, really helps me out, and all you have to do is press a button, so just go do it. All right, let's dive in. Number 1, existing home sales. The National Association of Realtors just came out with its latest report, so we're gonna spend a few minutes on this one. Existing home sales jumped 24.7% according to NAR, with sales up as a whole 8.7% year over year. I mean, look at this V-shaped recovery. It's astounding. And median prices are still going up. Nationally, the median home price rose 8.7% to $304,100, going over $300,000 for the first time ever, with 96% of markets showing home price appreciation. And here's who's buying. As you can see, the vast majority are first-time buyers, likely millennials who've been sitting on the fence with COVID kicking them off. The investor uptick is interesting to note because investors typically scale back purchases in hot markets. They don't like them. They want deals, not competition. But check out these dips in both unit sales and median price during the lockdowns. Perhaps some opportunistic investors took advantage of distressed situations during this time. The property's finally closing 2 months later in July. But there's another possibility, and it's definitely something we're seeing here in Tahoe. This category also includes second home buyers. So it could be that a lot of people ran out and bought vacation homes to get out of the cities without necessarily selling their primary residence. I suspect we'll see this investor number retreat back to its 9 to 11% norm in the coming months as the post-pandemic buying frenzy subsides. So that's the national situation, but stick around till the end because I have a bonus chart to show you that further clarifies current recovery conditions. So here's a local snapshot so that you can see how different local numbers can be from the national ones. In RENO Sparks in July, the number of units sold went up 18.3% year over year, while the median price went up 7.1% to $435,000. On the ground here in Reno and Tahoe where we are, the market has been absolutely insane, with people buying houses sight unseen, multiple offers, escalation clauses, no inspections, the whole 9 yards. It's nuts. My colleagues think this will continue well into the fall, but you're gonna have to watch to the end to see what I think. And I'll answer the question, was I wrong about prices falling in 2021? All right, let's move on to number 2, new listings. Zillow is reporting that as of August 20th, nationally, there are 13.3% fewer listings added to the market than 1 year ago, with total inventory down 28.4% year over year. And this is the furthest below 2019 levels it's been this year. In RENO Sparks, new listings were down 14.8% in July. We just don't have enough homes to keep up with demand, and we're seeing a lot of influx from larger cities in California. Number 3, pending home sales. The last national pending sales report we have from NAR is from June 2020, when they were up 16.6%. July's report comes out August 27th, but Redfin is reporting that pending sales are up 13.3% across the U.S. as of August 18th. In RENO Sparks, July's pending sales were up 25%, which means August final sales numbers should be really strong. Number 4, month supply of inventory. In July 2020, NAR reported on a national level that month supply of inventory was down to 3.1 months. In RENO Sparks, in July, we got down to less than 1 month supply of inventory, or 0.9 months, which is down 64% year over year. Remember, anything less than 6 months supply is a seller's market, and under a month is absolutely insane. insane. So if you're thinking about selling your Reno Sparks house, now is probably the best time ever. And by the way, if you want to track the housing market in your local area, download my Housing Market Indicators checklist. It's free and it gives you 14 indicators to watch and how to find the data. Number 5, new home building permits. Nationally, 1.495 million permits were issued in July of 2020, a sharp increase from the COVID lows, which dropped to 1.066 million in April of 2020. And you'll see in this chart here from the St. Louis Fed a near perfect V-shaped recovery. Locally, building permits here in Reno have not snapped back like they have at the national level, with 354 permits pulled as of June 2020, up from the May lows of 280. Clearly, we have an inventory problem and the builders are trying to fill the gap, but it's going to take them years to catch up. Number 6, interest rates. Interest rates today for a 30-year fixed mortgage are just under 3%, still at historic lows and running about 2 points higher than the official rate of consumer inflation. Number 7, purchase mortgage applications. Mortgage applications decreased 3.3% from 1 week earlier, according to the Mortgage Bankers Association, for the week ending August 14th, 2020. This isn't surprising as the home buying season starts to wind down. It's not a big decrease, but we'll keep watching this number. Number 8, unemployment. Nationally, the official unemployment rate is down to 10.2% after the COVID spike, a big improvement, but still massive. The broader U6 unemployment rate is 16.5% as of July 2020. Shadow Stats puts the real unemployment rate at 30%, which he calculates using the prior standard of government reporting before long-term discouraged workers were removed from the equation in 1994. Locally here in Reno, the unemployment rate is better at 8.6%. And just out of curiosity, in Las Vegas, the unemployment rate is down to 18% after hitting a high of 34%. So a big improvement, but still a ways to go. Nationwide, continuing claims are down to 14.844 million, still high, but moving in the right direction. Number 9, mortgage defaults. According to the MBA, the delinquency rate for mortgage loans on 1 to 4 unit residential properties increased to 8.22% by the end of the second quarter of 2020. Loans moved into later stages of delinquency, with the 60-day delinquency rate reaching a new high, and the 90-plus day delinquency rate moving to its highest rate since the third quarter of 2010. On a more positive note, 30-day delinquencies dropped in the second quarter, indicating that new delinquencies may be dissipating. The 5 states with the largest increases in rates of delinquency were New Jersey, Nevada, New York, Florida, and Hawaii, all with a prevalence of tourism jobs that have been especially hard hit during the COVID pandemic. The FHA delinquency rate increased from 5.96% to 15.65%, the highest rate since the survey began in 1979, so that's kind of a red flag. The VA delinquency rate increased 3.4% to 8.05% over the last quarter, the highest rate since the third quarter of 2009, so also not a good sign. The delinquency rate includes loans that are at least one payment past due, but it does not include loans that are currently in the process of foreclosure. Number 10, foreclosure sales. According to the Mortgage Bankers Association, the percentage of loans in the foreclosure process at the end of the second quarter was 0.68%. So that's less than 1%. According to RealtyTrack, there are 276,336 properties in the U.S. currently in some stage of foreclosure. So that's default, auction, bank-owned. In July, the number of properties that received a foreclosure filing was 4% less than the prior month and 83% lower than the same time last year. In the U.S., 1 in every 15,226 properties is in foreclosure, with the leading states being Delaware, South Carolina, Maine, New Mexico, and California. Number 11, Google Trends. Searches for buying a house are starting to soften, which is normal this time of year, while seller interest has turned up slightly, though the gap still shows far more buyer than seller interest. Number 12, portal traffic. Traffic on both Zillow and Realtor.com Realtor.com is still trending up, so consumer interest is still there even this late in the summer. Number 13, showing time. Property showings have been running about 20 to 50% above normal ever since May of 2020. But there's this weird drop on the end of this chart that I can't quite explain. Usually you only see those ahead of big holiday weekends, so maybe people are getting a head start on Labor Day. Not sure. If you have ideas, please comment below. Number 14, demographics. As a reminder, residential real estate is primarily driven by life events because shelter is a basic human need. Millennials continue to buy homes as their families expand, as boomers aren't quite putting enough homes on the market to satisfy the demand. So the shortage continues. Now, remember that bonus chart I talked about in the beginning? This is Realtor.com's recovery index for the overall US. The baseline is set to January 2020. The higher the index value, the higher the level of recovery. The lower the index value, the lower the level of recovery. The index is calculated as a weighted composite of housing demand, house prices, housing supply, and the pace of sales based on median time on market. So it's an interesting gauge of current consumer interest in market activity that's starting to turn after a dramatic run-up as we head into September. Now, the big question. Was I wrong about house prices dropping in 2021? A few weeks ago, I put out a video predicting that home prices would drop in the summer of 2021, and that was based on CoreLogic research and my own reading of how long it would take for the economy to recover from so many lost jobs and so many small business bankruptcies. The current frenzy that's pushing prices upwards does seem to put a dent in that theory, so we're just going to have to see how this plays out. Short term, I do think this crazy activity will continue into the fall, at least for a few more weeks. As forbearance ends for many this winter into spring, and some aren't able to find jobs to pay their mortgage, they will have to sell. But there may be enough demand to sop up this inventory. Against all this, you have the Fed putting trillions of new dollars into the economy with low interest rates for as far as the eye can see, which serves to prop up home prices. Essentially, right now, the US economy is high on stimulus. And how long it takes to come down from that remains to be seen. After every high comes withdrawal, unless we get another shot. But how many shots can a user take before the effects diminish or we die of an overdose? I guess we'll see. So that's what's happening as the summer winds down. If you're waiting for a crash, I'm sorry, it's just not gonna be happening for a while. If you're thinking about buying, it's okay to do it if you're gonna be in this house for the next 10 years. You have a good, stable job, you have a financial cushion in case something goes wrong, then go ahead and get the best deal you can and enjoy this place you call home. And if you're thinking of selling, now is still a good time to do it, but we are coming to the end of the season. So if you're gonna do it and you wanna get the best price and not be on the market for very long, then you really just need to move quickly and get it done. So, are you buying or selling or waiting? Put your thoughts in the comments below. As always, thanks for watching and I'll see you next time. Roll 'em on the ground where we are in both Reno and Tahoe. Okay, for the 10th time. Nationally, the home price, okay, for the 11th time. That's a freaking long sentence. Oh my God, these long sentences, they kill me. Nope, wrong. I guess we'll see. White girl doing the head bob doesn't really work, does it? Oh God, I can't wait for the troll comments on this one. Essentially right now, the US economy is high on stimulus. Oh my God, that's a tough one. Withdrawal. Like, I got my southern drawl. That's starting to turn as we head into December. No, September. Boy, I wish I had a teleprompter. I mangled that already. Okay, I think that's it.